Hi Prasad, thanks for joining us today. So in the last video, we saw the discussion on personal financing for especially for the beginners, and of course it will be useful for all, I believe. In this video, I just want to talk about insurances. So let me start the discussion with the first question: why I need an insurance? Because I am earning and I am having a quite a good saving. So in that place, why I need an insurance?
Hi Ashwin and hi viewers. It is good to continue our discussion on personal finance. So today we'll be learning about insurance. So what is insurance? Insurance is a contract between you and the insurer where you transfer some of the risk. So what could be the risk? The risk could be loss of life or loss of damage to the property or loss of income or even your hospitalization expenses. So even though you are earning good and you have good savings, and if you get hospitalized for a very long time, it might wipe off your savings. So and also depending on the reason for your hospitalization, you might also lose your job, and so the and also consequently you lose your income. So even though you have good income and good savings, it does not shield you from the uncontrollable risk. Hence, you need insurance.
Okay, but there are a lot of insurances products in the market, right? So out of all those, so what are all the must-have insurances for an individual?
So the must-have insurances would include life insurance, health insurance, personal accident insurance, property insurance. But as I said, that everything and everyone is unique, and this cannot be generally applied to all. So you need to understand your requirements, and only then buy the insurances.
Okay, I want to know the significance of each and difference of each insurance. So let us begin with the most important one, life insurance.
So everyone must have come across this insurance. Our parents must have bought life insurance policies in our name. Even you would have bought some life insurance policy for taxing purpose. So life insurance is bought to transfer the risk of you losing your life and your dependents not having adequate money or enough money to pay off the loans and to continue with the same standard of living. So for this, life insurance is must have, and this is the concept behind life insurance.
Okay, and I just want to know like how much cover I need to have for my life insurance. And another question is whether all of the family members should be insured or only the earning member should be insured.
So ideally, the cover value should be equal to 12 to 15 times your annual income. So let's say your annual income is 5 lakhs. So you need to buy a life cover of at least 60 lakhs to cover this risk. And you should buy life insurance only if you have dependents, financial dependents. So don't buy life insurance if you don't have any financial dependents. The non-earning members of the family, the housewives, children, youngsters, or even the retirees, they need not buy life insurance.
Okay, understood. And what would be the premium for you said 60 lakh no cover. So what would be the premium for the 60 lakh cover for a guy earning 5 lakhs say? So how for that for him that would be difficult to pay that much amount, right?
So let's say your age is 30 and you're earning 5 lakhs a year, and you need a life cover of 60 lakhs. If you go for a traditional policy, that is an endowment policy or a money back policy, the premium would be roughly around 1.5 lakhs for your age. And if you save 1.5 lakhs, that is almost 20%, 30% of your income. So that is very high. But the alternative is you buy term insurance where the premium is around 6 to 10,000 per year, which is roughly around 1 or 2% of your income.
Okay, so endowment is 25% of your income, endowment premium, and term premium is just you saying 1% maximum roughly. So why there's so much difference between the premium of these two? So what is the catch?
So, term insurance is pure life insurance. You do not get any maturity value or survival benefits. It is only paid to your dependents if you die. If you survive the entire term, premium paying term or the cover term, you don't get anything back. In traditional or this other kind of policies, there is a maturity. There are maturity benefits or survival benefits. So if you survive the entire term, you get paid on the maturity. So this is the reason that there is a huge difference between the premiums. But what I would prefer would be uh, higher life cover with lower premiums rather than going for lower life cover and survival benefits.
Okay, that's good. Right. But mostly life insurance is promoted as a tax saving instrument, right? So what is your thought on that?
So, first of all, insurance is not an investment, it is an expense. Understand this. It is promoted as a tax saving tool because people would like to achieve both the goals in one shot, save money and save tax. But saving money through insurance products is a bad investment choice because the money you would get on maturity won't be of the same value due to inflation.
Okay. But most of us thought would be like buying endowment policy because the money we are giving that comes back after some years. So that gives us strength to believe to invest in not invest to buy the endowment policy. So but now I understand you are telling the significance of term insurance over the endowment. Okay. So in this case, can you explain with some numbers so that it will be easy for us to understand further.
Okay. We would compare an endowment policy and a term insurance policy. Is non-smoker and cover is 60 lakhs.
So we are comparing endowment policy and term policy for a single male of 25 years of age, earning 5 lakhs per annum, and the cover required is 60 lakhs. The premium paying term is 30 years. So for the endowment policy, the premium is 2 lakhs 35,000, while for the term policy it is the premium is 5,900. So over a period of 30 years, in the endowment policy, uh, he would be paying around 70 lakhs 52,000, while in the term policy he will be paying 1 lakh 78,000. Now the maturity benefit in case of endowment policy is 1 crore 92 lakhs 54,000. In the term policy there is no maturity benefit. Now the maturity benefit looks huge. I mean, the maturity benefits looks huge, but if we consider inflation of 8% over 30 years, the value reduces to 19 lakhs 13,000. So you get the idea that even though the maturity benefits are promised higher, the actual value or the value of money after 30 years would be less. Now the difference between the premium of the endowment policy and term policy is 2 lakhs 29,000 for 1 year. So let's say if we accumulate this amount in different instruments, what would be the sum after 30 years? So in the savings account earning 3.5% per annum, the accumulated amount grows to 1 crore 18 lakhs 28,000. In bank FD earning 5.5% per annum, it grows to 1 crore 65 lakhs 97,000. In a corporate FD paying 6.9% per annum, the value grows to 2 crore 12 lakhs 58,000. The equity mutual fund growing with 10% CAGR, the value grows to 3 crore 76 lakhs 91,000. Now if we consider the effect of inflation on each of these instruments, the values work out to be, in case of savings account, the inflation adjusted number is 11 lakhs 75,000. In bank FD it is 16 lakhs 49,000. In corporate FD, it is 21 lakhs 12,000, and in equity mutual fund, it is 37 lakhs 45,000. So now you get the idea that it is better to go for a term policy and accumulate the premium in a different instrument rather than uh, paying higher premium in the of the endowment policy. One thing I would like to clarify is that I haven't considered the taxation of each of these instruments. So there will be tax implications on the accumulated amounts, and for that you need to contact your financial advisor.
Okay, thank you, Prasad. Now I understand the significance of term insurance over the endowment plan. But I have one more question. So, what if already I had started paying my premium for endowment? Say, suppose 5 years I am paying premium for my endowment policy. So, in this stage, are you advising me to cancel this and take a new term insurance, or what should I do?
So if you have financial dependence, you should definitely buy term insurance. But regarding the surrendering of your ongoing plan, you need to contact your financial advisor. He will compare that the maturity benefits or the benefits if you continue paying the premium.
Okay, there could be some loss, right, if we surrender the endowment policy. So those calculations will be
Yes,
done by
there
the
could be
financial
loss.
advisor.
Yes, there could be loss if you surrender it. So there are some other options, but it will be best that you contact your financial advisor for that.
Okay. Prasad, one more question. So generally, can you tell me, since now we have decided to go with term insurance, so what are all the do's and don'ts we have to consider in buying a term insurance? Because what I have a doubt, like what is the guarantee that my claim will be settled after any misfortunate happen? So those cases may happen, right? So
Okay.
you can tell the do's
So,
and don'ts probably. That will be helpful.
okay. So as I said earlier, that insurance is a contract between you and the insurer. So you go to the insurer and insurance company and tell them that see, I earn 5 lakhs per year. I need a cover of 60 lakhs. Please get into a contract with me to cover this risk. Okay, so you need to, and this cover, this life insurance cover will be paid to your dependents if you die. So you need to declare all the things correctly when you get into the contract with the company. Okay, the company will be taking risk on your behalf. So the company has a right to know all your medical conditions when they get into the contract. So if you smoke, please declare that. And if you have diabetes or any other heart elements, this kind of elements, do not hide. And one more thing would be that go for a cover above 50 lakhs. See, medical tests are mandatory if you go for a cover above 50 lakhs. Some people, what they do is they opt for a cover of 49 lakhs just to evade this medical test and settle. I mean, go for a lower premium. Don't do that. Go for a cover over 50 lakhs. Medical test will be done, and you would get the test results. As the insurance company that include this test results in the original policy document. So in this way, you ensure that your claim is not denied.
Okay, because no, when people says that when people hide, they don't smoke or they don't drink, they thought premium would be less. So probably
Yes,
most of the people do that.
yes, yes, yes.
But finally,
Yes,
after they die, if they found out, then the total claim can be denied. So
yes,
we
yes,
should
yes.
avoid that. That's a good point.
Yes, yes.
Okay, Prasad. The life insurance is okay. Apart from life insurances, what are all the other insurances one must have?
So the other insurances would include health insurance, personal accident insurance, and property insurance.
Okay, I think that may take another video. That much. So can we take that in another video explanation of each, and that would
Yes,
be
yes, yes,
helpful.
sure, sure. Yes.
Okay then. Thank you, Prasad, for giving your time.
Thanks, Ashwin.
Yeah. And viewers, we will see you in next video with the explanation of other insurances one must have. So till then, take care and goodbye. Bye, Prasad.
Bye.
Thanks for listening till the end. If you have any doubts regarding personal finance, you may please contact Mr. Prasad, and I am sure that he can able to manage your finance and build your wealth. Thank you.